Alright, so we're on to our lesson number 2. In this lesson, it's a bit more content heavy, but we're still going to be focusing more on the technical side of things. And we're going to start delving into a little bit of the quantitative stuff. So just to go over what we're going to cover today, we are going to cover entries and exits from a technical analysis perspective using Heikin Ashi. We're going to talk about drawing trend lines, again, still on the technical analysis. We're going to talk about programming trend lines into Pinescript. And then we're going to talk a little bit about z-score volatility, which has to do with why we draw trend lines the way I'm going to show you. So it's a bit of a heavier lesson, but we're still focusing more on the technical analysis. And I know probably eager to get started with the quantitative stuff, but we have to build ourselves to that point. It's important to have a good understanding of technical first so that we can supplement our quantitative analysis. So, you know, we're just building the fundamentals to get us to the more advanced stuff. And we will be talking about probability as early as lesson 4, which there's a lot, it's all about probability. So let's get on with this lesson. We have ES again, looking at the daily chart. These are the regular candles. So we want to just flip our chart over to the Heikin Ashi. Now what we're going to do is we're just going to draw in some daily supports and resistances. So we're going to launch our menu here, and we're going to look for the starts of downtrends and the starts of uptrends, and we're just going to draw in some supports and resistances. All right, so there's one there, there's one here, 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 and here. Okay. All right. So this is actually looking pretty good. This is just like a little grid. We don't even really need to simplify these with boxes because this is like perfectly spaced. So now that we have this drawn out, we can switch to normal candles. If we switch to the lower time frame, we can really see how these work. We have a breakdown, we have a retest and reject, and we eventually make our way down to this support level. Same situation, we reject, and we make our way down eventually to this support level, and then the next one is down here, okay? So from a purely technical analysis perspective, when we are looking for our entries with Heikin Ashi, we should have these daily / weekly support and resistances drawn out. So when we are looking for our trend reversal signs, so those are our wicks and patterns, we need to be able to understand where we are in relation to the major support and resistance line. So if you see here, this was a bearish ascending wick, right? And do you remember where we pull back to with the bearish ascending wick? It's the start of the uptrend. And where did this uptrend start? It started right on this support line. So with that, we know that this already established support line is going to be our target. So when we want to plan our entry to short it, all we're going to do is we're going to wait for a breakdown from this trend line. And from that breakdown, so it happened right here, from that breakdown, we're going to short it to the next resistance level. We're going to start trailing though, right? Once we get down here, we're not going to wait for it to come all the way down. We're going to set a trail so that we don't lose profits unnecessarily, but yeah, this is going to be our trigger to enter, okay? Now what about the inverse, a bullish pattern? So if we look here, we had a bullish ascending wick to the downside. So our entry here, we have a couple of options because we aren't necessarily at a support level here, right? So it's very possible that this could be a failed pattern and we come down. What we can do is we can wait for the next candle on the same time frame to confirm this bullish pattern. So you see this candle actually solidified a new, potentially a new uptrend starting. So we can wait for that candle. Okay. If you're impatient, we can slip over to the normal chart and we can simply get in on a break over this trend line, right? We would start trailing here, probably get stopped out in this general area, but we held this support, and once we started pushing back up, we could get long again, back up to this resistance level, okay? So those are generally how you can play your support and resistance. Let's say theoretically we had a bullish pattern forming right here, okay? We didn't, but let's just say we had a bullish pattern forming right here. We would want to wait for confirmation that we're going to break over this support line or this resistance line and hold it, right? We don't want to get in right away. So like here, you can, if you're an eager beaver, your risk reward would be fine because if you got in here on this push, you're going to be stopping out if we break below this ascending wick pattern trend line. So your risk reward would be fine to get in here. But generally we should wait for a break over the trend line on the lower time frames to confirm that we are actually indeed going to hold and go up. And this was a very clear holding pattern right here. Okay. So another way we can use Heikin Ashi to determine entries and exits is by actually identifying true bullish and bearish breakout patterns. So if we look right here, this looked like it could have been a bull flag on the 1 hour. So if we drew you know, some trend lines here, this looks like it could have been a nice little bull flag. Well, we can actually check with Heikin Ashi to see if it's likely to break out or break down, because if we flip over to the Heikin Ashi candles and we go back to revisit that bull flag, there was really no indication of any bullish continuation pattern. In fact, it looked more bearish. You know, it looked like it was trying to form some bearish patterns here and here. So generally with a bull flag or a bear flag, you will see the formation of ascending, descending, ascending or descending wicks, which is going to confirm that we're going to see a break up or break down, okay? All right, so here is a really messy potential bull flag, all right? So if we want to look here, it's a very elongated bull flag, but let's see if Heikin Ashi, let's just see what Heikin Ashi has to say about it. So and there you go, you have your bullish descending wicks, which confirms a breakup over the highest wick, which would be right here. And we did break up quite a lot from that. Okay. So these are other ways that we can use Heikin Ashi to plan our entries and exits by confirming the actual breakout pattern that we're looking at, whether it is indeed actually a bullish pattern or whether it is a bearish pattern that's going to see follow through. One final example that is ongoing right now is BTC. If we want to look at BTC, it is bull flagging on the 4 hour, and we do have a little bit of confirmation from Heikin Ashi that it is likely a bullish pattern with these wicks, right? And so where would our TP be on these wicks? Because it is happening as a trend continuation pattern, we're going to look for our highest wick that led up to the ascending, which is right here. Okay. And you see we already retested this, so it's kind of already followed through, but we really should, with this kind of pattern, we really should see it break out over this 35,180 point. Okay, so something to keep your eye on, depending on when you're watching this video, I guess. But yeah, just interesting how we can use Heikin Ashi to look for these breakouts. So now we're going to talk about trend lines. So let's get rid of all of these. And now all a trend line is just drawing trends with lines, hence the name trend lines. So how people draw them is really subjective, and people's approach to trend lines are pretty subjective. How I approach trend lines generally, if I am doing them manually, is I actually do my trend lines on the line chart. And why I do that is because you're filtering out all of the volatility. Now, when you're looking at highs and lows, you're just looking at volatility. A high and a low is volatility. At the end of the day, all that really matters is where the ticker closes and where it closes in relation to its previous close, right? So when you look at the line chart, it's a way to filter out some of that volatility. Now, many traders I see use the step chart or the bars like this. A lot of them feel that this is a good way to sort of filter out volatility, which is fair, but you're still kind of getting in to those highs and lows, where with a line chart you're just filtering that out completely and looking at the closes. Okay, so if we look here, we can easily draw a trend line just like that. And we can easily see where it actually fails, because we can see that a close actually happened below the trend line here, which signals great weakness, right? And so when we popped back over, it was likely that it was going to fall back down. Why? Because we actually had a close below this trend line. If we just look at the candles, it's really hard to see whether we close or whether it was just a low wicking down there, because there's just so much volatility in this chart. Okay, so when we really need to see what happened in this mess of a chart, it's much easier just to look at the trend lines, at the line graph, sorry, because we can see, okay, there's confirmed weakness here because there was a close below this line. And statistically speaking, once we have one close below this line, even if we pop over, the odds are that we are going to break that line. So it's really good for us to know where the closes fall. So when you're drawing trend lines, I tend to recommend drawing them from the line chart. It's easier. You're filtering out the volatility, and you can clearly see where you should be drawing your trend lines. Your trend lines should be intersecting with the closes, right? With candles, people tend to draw internal trend lines like this because they're ignoring the highs and low wicks. But this way is technically incorrect with a line chart. You shouldn't be intersecting with closes. You should be keeping it aligned as perfectly as possible. So you see we formed a wedge here, and we had a confirmation of a breakup here. Okay. Now, before we get into continuing our discussion on trend lines, I want to talk more about Z-score. Now, Z-score is going to be very fundamental for you as a quant trader. Most quant traders are obsessed with Z-score, math-based traders. Z-score is actually how market makers what market makers use to calculate implied volatility for option pricing and that kind of thing. So what z-score is it's a measure of the distance from the mean. So the distance a value is from the mean. So if we come over to this chart, what we're going to do is I'm just going to write out how we calculate z-score, okay? So z-score is calculated, z-score is calculated by taking the current value minus the average divided by the standard deviation, okay? So that is how we calculate z-score. And if we were going to do z-score in Pinescript, we can open up Pinescript. We're going to title this z-score. We're not going to say overlay because we don't want to overlay this. So we're just going to calculate the z-score. And we're going to calculate the z-score for the high, the z-score for the low, and the z-score for the close. Okay? So our z high, we're going to take high. And you see how this lights up as red? That means that it understands that we are pulling the current high price. So we're going to take the high, and we got to minus it from our average. How do we calculate average in Pinescript? Well, we can just use a simple function called ta.sma, simple moving average. The source is going to be high. The length, let's do 14. Then we're going to divide it by the standard deviation. Now, how do you think we're going to get standard deviation? If this is the function for average, this is the function for standard deviation. So we see up here it says source, length, biased. We don't need to worry about the bias, we just need to worry about the source and length. So the source is high and the length is 14. These two values need to equal each other, okay? So there we go. That's the z-score for the high. We repeat this process for the low. And for the close. Okay, now we have to tell Pinescript to plot these things. And we're going to have to change the color because we need to know what we're looking at. So if you remember from our previous tutorial how to do the plot function, we're just going to do plot z high. We're going to change the color to green, plot z low, color equals color red, and plot z close. We're going to leave it at the default color, which is just blue. Now we're going to say add to chart, and here's our z-score. Now you can see when we look at the z-score how the high and the low are spiking in all directions, but the close is just chilling right in the middle, right? So this is showing you how the volatility is affecting the z-score, right? This is all volatility. When we're looking at the highs and the lows, we're just looking at pure volatility. It's important to be able to plan for highs and lows for our day trades and swing trades, but when we're trying to ascertain trend, we want to omit the highs and lows. Okay, we don't want this volatility. This volatility is going to make us money for short-term trading, but it's not going to help us identify the trend. So when we filter out, when we are looking at the trends and drawing trend lines, we need to see the bigger trend. If we start putting in these highs and lows, it's just going to cloud our ability to see the overarching trend. It's just going to add a lot of noise, and we can see it with the z-score. Okay, now keep this in mind because we're going to come back to z-score in later lessons. We're going to build a lot of stuff off of z-score, do a lot of price predictions with z-score, a lot of good stuff. So this is your introduction to z-score. Memorize this equation, okay? It's very important. All right, so now we are back. We have cleaned up the chart. I've removed all of our previous drawings, and now we're going to talk about trend lines with Pinescript. So hopefully you still have this indicator that we created last time, so our high and low trend line here, because we're going to just continue to build on this and add some additional functionality to help us. Okay, so now that we have that open, you can see it's identified our highest and lowest areas. And we are like right on that low. So what we're going to do now is we're going to do a couple of different things. What we want to do is we want to be able to toggle the look back period. So right now, this is looking back 50 in the past. We want the ability to manually change that, okay? So how do we do that? Well, we have to put in a command in Pinescript to tell it that we are looking for the user to input a variable, okay? And specifically, we are looking for the user to input a interval variable. And what an interval variable is it's just simply a variable that doesn't have a decimal point, okay? So interval is defined as int, and it just means that it's a whole number. 2 is an example, 3, 4, 5. These are all examples, okay? The opposite of interval is called a float. And that is anything that has a decimal point, like 25.20, 26.9. Anything that is not a whole number is a float, all right? But because we need intervals to define the look back period, we can't define, 50 and a half candles back. It just doesn't make sense to Pinescript. So we need to define an interval that is customizable from the user. And how we do that is we have to create a variable and we have to assign it the command for interval input. So let's create a variable called lookback. Lookback, length, lookback, whatever. I'm just going to call it lookback. So now we have to give this variable a command to input an interval. So what we're going to call it is input.interval. We're going to open up a bracket, and you'll see it's already recognized as a function. So it's asking us to put the default variable, and the rest is all optional. So we're going to put in the default variable and a title. So the default variable is going to be 50. The title has to be in quotation marks, so we're going to open up some quotation marks and put lookback interval highest and lowest, okay? Now we have to tell these functions that we want to pull the interval from this variable. So how do we do that? Well, we just simply replace the 50 with lookback. So then this is going to reference this, which is going to reference this, which will be whatever we input, okay? We're going to do the same for here. Now, because we're customizing our look back period, remember we changed this to look back at the same point in time. So what we're going to do is we're going to just change this to look back as well. And all bar index means is it's just the reference value of the bar. So Pinescript and TradingView assign each candle a bar index value, which is an interval value, and it just keeps track of, that's how it keeps track of its candles. So that's all bar index does, is it's just a location referencing variable, okay? So now that we've done that, we can save. And when we go into our settings for our indicator, you see, we can change our look back. So if we want to look back 100, we can do that. Okay. what about using Pinescript to automatically plot a trend line? So we have the fundamentals of how to code in these lines. So let's try to get Pinescript to create an auto trend line, okay? So first of all, what we have to do is we have to define the parameters for our auto trend line, all right? So I'm going to use these slashes just to separate the code from up here down here. So we're gonna just label this auto trend line just for our own reference, so when we come back we know exactly what we're doing in this section of the code. So for our auto trend line, we want to find, let's say we want to find the highest value or the lowest value in the previous 100 candles. So we'll make a variable called lowest 100, and that's going to equal the TA lowest low 100, okay? And then we want to end it at the highest 25. So TA highest high last 25 candles, okay? Now we have to define this auto trend line, so we have to just do the same thing here. So var line auto, we'll just call it auto, equals NA. We have to add a command to delete, line delete, so it doesn't just keep repopulating. So line delete auto. Now we have to define this. So I'm just going to copy this so we don't have to rewrite all of this. So we're going to do auto colon equals, because remember the colon is to say that we are redefining an already declared variable. So we've declared auto up here as not applicable. Now we're redeclaring it as a line. So line new. Our lookback is going to be 100 because we're starting from the lowest and we're going to go to the highest. So our lookback is going to be, our reference is going to be 100. Our first location is going to be the lowest 100. And our last location is going to be the highest 25, okay? And we'll change the color to purple. Now we're going to save this. And there we go. We have our trend line, which interestingly served as kind of a rejection point in this general area. Okay. What about creating a manual trend line through Pinescript? How would we do that? Well, what we can do is we can add the same type of parameters here for our trendline values. But because our trendline values aren't going to be an interval, they're going to be a float value, right? Because we have decimal points in prices, we're not going to use the input interval. We're going to use the input.float. So let's call start trendline 1. We're going to say input float. Let's just default to 200. Start of trendline. Start trendline, or sorry, stop trendline 1. Input float 200. End of trendline. Okay. Now we're going to create an interval variable called bars. And this is just essentially how many bars back we want to start the trend line. So let's just assign it a float of 5. We'll title it bars back. And there we go. Okay. So now we have to declare this manual trend line. So we're going to call it var line manual. Not available. We're going to just copy this because we're lazy. Change that to manual. Our bar index, we're going to assign the bars interval. Our lowest is going to be start trendline 1. Our highest is going to be stop trendline 1. And we'll give it a different color. Let's give it blue. Okay, we're gonna save it. All right, so what we can do is we can use a candle counter, period candle counter. You can use mine right here, period candle counter. And we want to draw a trend line from this high to this low. So we see that that's 58 period. The high was this green line, which is 4431. So we're going to open this up, start trend line 4431. We forgot to use the delete function, but let's just continue this. 4182 is where we're going to end it, 4182, and our bar back is 58. So you see all of these lines it's plotting. It's because we forgot to tell it to delete redundant lines. So line.delete manual. We're going to save that. And there we go. We have our trend line. All right. And we can really place this wherever we want. If we want to place it up here at this variable here, we can, what was this value? This was 4567 to 4182, and that was 173. And there's our trend line. See? It's pretty cool, right? Pretty convenient. All right. Well, make sure you save this. Save your work. We'll be coming back to this to continue to build on it with a little bit more functionality. But other than that, you have finished the second lesson. This one was really heavy, so take the time to review as you need, do some practice. Because now you have some ability to execute some things, let's assign a little bit of an exercise. So if you feel up to it, why don't you find a ticker and perform a Heikin Ashi technical analysis on it. Look for any pattern that has a setup, or sorry, any ticker that has a setup. Like BTC would have been the perfect example, but don't use that because I just told you. But look for a setup using Heikin Ashi, identify the supports and resistances, and plan where you think it's going to go based on the setup. Whether you see some bullish descending wicks with a wick up here, so you need to identify whether it's going to go up or down and the likely target point. Okay, and if you feel comfortable, post an idea, tag me in it so I can review it, and yeah, that's your assignment. So apply what you've learned with Heikin Ashi, and we'll catch you in the next lesson. Thanks for watching. Safe trades, everybody. Take care.